currencies in particular, and as a principle we need to be buying strong stuff. So we are going to do our homework by looking at the indices or the composite of all the currencies, as well as the precious metals and crude oil, so that we can decide what we're doing next week. So we'll start first by the granddaddy of all, which is the US dollar. And okay, market, this is exactly what I've been trying to tell you for the last, yes, some trades were triggered and your trigger point is going to be your exit point, but you have to take the second trade and you have to take the third trade, and you have to keep on taking those signals, because you might get some noise right here, market. And as I said, nobody can predict the future, so you need to make sure that if you get triggered a signal and then you're stopped out, you take the other one, because you are not making an error or a mistake. And that's why when you exactly what you said, Tuesday and especially Thursday were very good, so the sum total of your plan would have been brilliant. Okay, that's exactly the point, and that's why I am passionate about the planning. And this, I'm saying this for Doran, because if you don't do that, you will, this means you will have a bad Monday, but you will never have a good Thursday or a good Tuesday, because that bad Monday is going to scare you out of the market. Okay, I agree. Thank you, Mark. Okay, so looking at starting with the US dollar, and let's focus now, so we don't want to keep you too long for today. If you look at the US dollar, it has now pushed back a great deal, especially on Thursday. You see the big selling off that came in on Thursday, and this pullback that you see from the 81 all the way down to the 74.85 is actually gave back about 90% of all this move that we had to the upside. I mean, all that move that the dollar has gained to the upside from September all the way up to the peak of October just gave it practically 80% back, and this is too big a retracement. This is a pullback which is bigger than normal. What's happening now is that we are entering in a bigger trend change pattern, and this is a much bigger pattern. I mean, I changed the time frame to a weekly, so I compressed the data further. So we are getting here, this area here, from this area over here. This is a trend changing pattern. This is a congestion, if you will, and we are getting a break above a structure, then a failure, and this probably now it is going to go in and set a higher low, and we are going to start another leg to the upside. Again, this is being a typical in a trend changing pattern. You're going to get those range trading, if you will, and this here is going to be our new structural point, which is the 80.43, and if the dollar gets above the 80.43 now, that is going to be our trend changing pattern. And what we are going to have right now is a beginning of a move back. Again, it's going to be short-term moves because we are inside a congestion area, and as you can see, we have tested the 74.85 low, and this was a very big range on Thursday. Friday was a typical day that follows the big range day, so therefore it is a neutral day. It is an inside day. It did not make an attempt to test these lows below 78, 74.82, and it was a very, as I said, a very tight, a very narrow range day from 75.30 as a high and the low of 75.04. So the whole day, the range of the whole day was about 25 points, which is basically nothing. And closing the week at 75.21, that makes our trade in the dollar very easy, and I'm going to but our bias is still to the downside. And since we are in a congestion area, I am not really looking for too much continuation to the downside anywhere below the 74.27. I might get a test of the 74.82, but I don't think we're going to break the 74.27, because this has become now a big trend changing pattern, and it's going to take some time to develop. So it's going to give us quite an easy setup here to buy, and I'm going to show it to you. So let's go to the next one, which is the Australian dollar. And of course you see the big range that we had in the Australian dollar on Thursday. It went above the structure point of the 106.32, and we closed the week at 106.49. This is a very strong setup. This means that the Australian is quite strong, even though on Friday we came below the 106.32. We traded back below this, but we ended the day closing back above the 106. So based on that, the Aussie is so far very strong, and we're looking for a continuation to the upside. The other one we're going to look at is the British pound. And the British pound was actually one of the best pairs that traded last week, because this was, like I showed you in the FX chart. If you look at this, the 159.60, like I was telling you from last week, that was our magnet point. And as soon as the prices were pushing, they were trying to go to test the 159.60, and as soon as it did, this was the magnet. This magnet, these orders that's sitting above the 159, did its job, and it took us all the way up to the 161.50. So that was quite a decent close for the British pound. So we should be looking for, again, the pound looks quite strong. It is a very decent close. It closed near the high of the day. We had, again, a typical reaction following a big range day, and we had a positive close. Actually, we closed above the close of the previous day. So we closed at, the previous day's close was 161.06. We actually closed at the previous day's close, which is a decent close, but this is not a screaming strong point, because I have a minor significant point, or a significant point here at the 106.98. And what we have done is that we closed right at this point. So this gives us a brilliant setup. We can buy the British pound right here, and our risk or stop is going to be right below this. So you're basically risking 1 point, and that would be a magnificent trade. If the pound continues higher, your stop on the pound based on the index is practically nothing. If we look at the euro, this as you can see here, again, after all these big range days is on Thursdays. So Thursday, this move was in the pound, the euro on Thursday. You would see the same move on the Australian dollar on Thursday. You would see the same move on the British pound on Thursday. So Thursday was the big day for the loss, or the big loss in the dollar. But you can see, based upon the closing, the pound has the best close so far. It's the only one that closed positive. The Aussie closed slightly weaker, but yet still positive, but weaker than the pound. If you look at the euro, it's still closed above the structure, but that is the weakest of them. So the euro so far is the weakest of the three major pairs. So the pound is number one, the Aussie is number two, the euro so far is number three, or slightly the weakest. And if you're going to look at the Swiss franc, again, the Swiss is pretty much, as you can see, looks very much like the euro, and that is understandable. Why? Because the Swiss now have pegged their currency with the euro. Therefore, you're probably going to see the chart of the Swiss franc and the chart of the euro pretty much identical, exactly twins. All right. Last but not least is the one that's very interesting this week for us, and this I want you to focus on, and it is fundamental to the way we trade, because we're looking for the strong pairs to buy, the strong currency to buy, and we're looking for the weak currency to sell. And if something is very strong, we're looking for the first signal to sell it into the opposite direction. So if you look at this chart here, the Japanese yen closed at 132.21 here, and this is the all-time high for the Japanese yen. I'm going to put for you a chart for the weekly chart for the yen. This is as high as it has closed in its history. This is historical highs. This is the strongest currency in the world fundamentally, and so forth technically. Therefore, it is the most vulnerable. Since it is the strongest, it is equal to be the most vulnerable. Why? Because people now are so scared that the Bank of Japan is going to intervene. They are so scared of anything that can happen in the Japanese market to jeopardize their position, their long positions or their profits in the Japanese yen. Therefore, the most vulnerable pair to be sold is the Japanese yen. Now, if you look at this congestion over here, this week, the high of this week was 132.26. We closed at, as you see on the right hand side here, at 132.20. The all-time historical high, the historical high was 132.01, and what we put here on Friday was the all-time high. The close, or the high of this week, the high of this last week versus in the yen, was the all-time historical high. And we closed at 132.10, and the previous high that we have here is 132.01. So we are sitting right above this high. We have closed right above, just 0.10 of a yen right above this high on a weekly basis. And if you look at the daily chart, you can see how many times it tried to break above this 132. Once, twice, 3 times, 4 times, and this is the 5th time that we broke above the 132, And what we have here is just a close at or above the 132. We did not have what we had in the British pound. Remember, above these points, this is what we call the magnet, and magnet is because there is a lot of orders sitting above that. That's why they attract the buyers, because now it is an easy follow through to the upside. And if you see the British pound, when we had this magnet of the 159.60, as soon as it broke it, look at this move. We should have had this explosive move to the upside, because they are filling all these orders sitting at or above the 159.60. That's in the British pound. But in the yen, for 5 days, they've been trying to trigger those orders that they have up there, and there is no follow through to the upside. And this doesn't mean that this thing is going to crash. Or what it means, that this is a caution sign, and we should be looking for a way or entry points to be selling the Japanese yen, because right now it is so far going to be the most vulnerable upon a trade below that high of 132. So okay, and of course I'm going to look at the Canadian dollar also, because it's very close to the US dollar. Again, this is also, we can consider that a slightly weak close. So if I'm going to, let's look at the other commodities too, so that we can see if there is the correlations that is working with the US dollar. If you look at the stock market, you can see this is the Nasdaq. The Nasdaq is been moving higher. We have a buying point or a trend changing point above the 2430 level. We closed the week at 2396. A trade above the 2430 is going to be a trend change, a structural buy versus in the Nasdaq, and I'll tell you what it means in a minute. And also the S&P, you can see that the S&P here is actually closed the week at 1281, and we have now the trend change above there, but that is a very strong buy for this, for the US index. And we should be looking towards a test of the 1362, and this is because we are also having a seasonal tendency in the stock market, and that's what we call the Santa Claus rally. And this is usually starts after the third Friday of October, where the option expires, the option expiry on the third Friday of October, and we get into what the hedge funds managers look at is the window dressing towards the end of the year, so that they can show that their funds are up. So they try to chase into the market by buying the companies that are technically strong. So they want to show in their year end that, let's say, they own the Apples and they own the Boeings and they own these companies that in the world, so that now they are in their hedge funds. And yes, James, exactly, I'm getting into the bond in a second. And that is, again, primarily it has been a traditional move in the market from the latter part until the beginning of January, and then the market gets into it. So right now we're beginning the Santa Claus rally very nicely to the upside. You can also see the bond market. This is the US stock bond market. You see it beginning to sell, but we're still in an uptrend, because now interest rate is low, but this is again positive. And the simple point here, guys, is if the stock market is going up, this means that people are buying US equities, and in order to buy US equity you need to buy it in US dollars. So you want to buy Apple, you have to pay for Apple in US dollars. So if Apple now is going up, this is the chart for Apple, it is going up. You want to invest in Apple, you have to pay in US dollars. You want to buy HP, for example, you have to pay in US dollars. Look at HP. This is Hewlett Packard. From 50, it went up 10% last week. In order for you to gain this 10% or participate in that move, you need to be having US dollars. Therefore, the buying, as I said, that is coming into the dollar. We should be. These are the reasons that we might be getting the buying in the dollar. So therefore, we need to be careful. If you look at the commodities, crude oil is strong, and it looks that again we should be looking for continuation to the upside, but there is a pause here. So again, we might have a slowdown because of the if the dollar begins to move to the upside, then all the commodities are going to slow down. And you can see that also in the other commodities that the selling has already begun. So if you look at where is the rest of my commodities, if you look at, this is the bean oil, it's beginning to sell off. Gold is the only one is holding. Silver is okay. All the wheat and they're all sitting at the lows. All of them are looking weakness, and that weakness is only to coincide with dollar strength. There is no, if the dollar begins to go up, all these are going to continue and start coming down. So if I'm beginning to have weakness in commodities for no reason, then this weakness that I have now is only related to strength in the dollar, and we have seen the strength now coming into the S&P and the Nasdaq, and the weakness in the bond market. Having said that, so let's now go and do our plan. Which ones are we going to be looking at buying, and which one we are looking at selling? Okay, so if we're looking at the Australian dollar, okay, so the Aussie is now strong, but we have the close at 106.40. My selling point is 106.30, so it's sitting, it is vulnerable. The same thing with the yen. The yen is at the high, but it is also vulnerable. The British pound, we had the close at 161.08, so it is all, I mean, all the currencies are just sitting at the break point of a selling, of being sold. If you look at this, again, that's why I'm telling you the vulnerability. Again, this is how higher bottoms are being set up in the market. You get an extreme move to the upside, and then it fails to continue, and they're all sitting at a selling point. So this selling point is 10 pips away. The yen is also 10 pips away. The British pound is sitting at the selling point. The euro, again, it's in the middle of la la land. The Swiss franc is pretty much like the euro. So the way I will be looking at it, I am looking for a bias to the upside in the US dollar, as long as I have the trigger on the trades. But there are ones that I would be looking at initially at selling them, because they have the inherent weakness, which is the Japanese yen. So the way we are going to be planning our trades this week, we are going to be, this is the most vulnerable right now, which is the Japanese yen. That's the most vulnerable. The other weak one is the US dollar. It's slightly weak. And again, I have weakness in the Swiss franc. And then all the other pairs, which are the Australian dollar, the British pound, and the euro, they are all sitting on a breaking point. So I'm going to be looking at selling the Aussie, selling the pound, and selling the euro, not immediately, but as soon as they come below our selling point. So I'll be selling the yen below the 132, and I'll be, so I can be looking now at selling the yen. I can do the buy the Aussie, sell the yen. I can also do the pound yen. I can also buy the euro and sell the yen. So I'll be selling the yen versus the three currencies. Last but not least, I can get the dollar in, but I can use the pound yen first. I buy the pound yen, I can buy the Aussie yen, I can buy the euro yen, and last but not least, I can take the dollar yen. I can also buy the dollar, sell the Aussie, buy the dollar and sell the euro, and of course the CAD, and of course the dollar pound. And these all of them. So I'm looking now primarily at selling the yen. Secondary, I'm looking at buying the US dollar, and that is based upon the setup that we have. Okay, so let me save the recording, and while I'm saving it, if any